The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon till 1 p.m. Eastern Time at 877-927-6648. Look at this. The Dow is up 130 at 24,961, knocking on the door of 25,000. That 25,990s, 24,990s area could offer quite a bit of resistance. Once through it, that's really positive. And we'll talk about the aspect of the H pattern and the weekly charts that can go to an M pattern, where we are, why the IWM, suddenly the small caps leading the field, all-time high. Beautiful. So let's just go through the S&P. Right now, the S&P is up 884, up 0.32. The Dow is up 0.53. Up 131 at 24,963. If you're looking at the E-mini here, it's only up 0.24%, up 6.25, bumping into this resistance that I showed subscribers to my opening call since Thursday. I was saying up in the 2744 area, right there. That's that little candle, the candle of April. No, it was March. That's right. That's the one that went to March the 21st. 2744 round number high, failed and just slumped after that. That's the resistance. Once you get above it, you can go to 2807. But what's really important is you have to respect that resistance. The very word resistance is telling you that there's a cap, that there's an upside. How can we put it? There's a barrier that needs to be overcome, but overcome decisively for that not to become a repellent area. So we went there once. Green candles. Look, let's go for the Friday turnaround candle from the 2591.25 low. That was on the 3rd, I think, 3rd of May. And green candle that day, even though it went so much lower, it went to green candle, second green candle, third green candle, fourth green candle, but a tiny little doji candle, even though it was a peak A. Oh, wait a minute, that should be a B. Oops, let me make a change here. Oh, no. And then this continues. Green candle, green candle, green candle. Today, you can't talk about a green candle because you got 4 hours, it's just under 4 hours to go to the close. But so far, it's a green candle. And we're bumping into that resistance. You've got left side, right side price time match, which can take you all the way to, I think it's Thursday of this week. Yep, that would be the 18th of this week. I think that's Friday, maybe. Yep, Friday. And so you've got all week in which to pierce that number. The MACD, the moving, this is the daily chart. The MACD is strong. The CCI has turned down a little bit, but it's still holding pretty well. That's the CCI. I shouldn't have said that. That is a commodity channel index, I believe. Yep, that's it. Right there, it's called CCI average. Yep. And that is just turning down a little bit. The MACD is pushing higher. The green line, the differential, is actually now higher than it was before. Now, let me explain this because we have a lot of Chapman waivers here. If you look at this, it goes peak A, peak B from the low that was made at 2552.00. That was that was April the 2nd. Well, the low that was made May the 3rd at 2591.25 was higher. And that means that even though I had a little gray A right inside there, the moment it takes out this previous peak of 2718.50 made on the 18th of April, it triggers a continuation of that wave count, and the internal ones, these little ones here, they don't count anymore. So this is actually an overlapping wave C, I don't have to get into that, with a stochastic at 92%. And that's what I was saying to subscribers over the weekend. The reason why from 2 Fridays ago, we've been buying the Dow. We've been buying long positions. We've been, anytime if we would have stopped out, I jumped right back in again, because the power of this particular move under the conditions that I was looking at, under the rotational aspect of the semiconductors, still acting extremely well, even with that pullback from NVIDIA the other day, Friday, still very strong. So this says to me that I have every reason to consider that this is a blue leg C, meaning it's in a buy mode, that there should be at least a peak D before we start to see a deeper pullback. In the daily chart, the stochastic at 92% is outstanding. That's why I wanted to take a little time now just to go through this. The reason is the E-mini is almost 24 hours a day, except for the weekend. So that's really the most composite picture we can get of the market itself. I think very short term, we're getting extremely overbought on like a 120-minute basis. We'll see that we went to a peak D in the 100 when I sent out the chart this morning on the E-mini, both to the Dan and to subscribers. I said there's a peak G/C. The technicals are weak, but there could still be a pop-up. And the reason I said that is that the strong resistance in the 2740s kicks in, 2740 to 2744. All right, so we've made a peak D. Technicals are still very weak in the 120-minute chart. And that weekly chart, and this I can go to the question that I've had from a number of people saying, hey, wait a minute, in your weekly charts, where are you? Well, I'm in the middle. I have no choice. The chart is in the middle. What I said is, for my subscribers to my opening call over the weekend, always on Saturday, I try to send out as many charts as possible. I wonder if I can find it right here. That's LTS, that's IWM. I'll find it. I wanted to find this, and I'll show you exactly what I send out and why I send it out and why I think it's so important. If I can just get it right here. Was that there? All right, I can't find it. During the break, oh, there it is. Okay, so this is for the, oh, that was last week. Sorry, I will find it. It just suddenly hit itself amongst all my different charts. What I do show is in my week outlook, WEK outlook for the Dow, my 3 time frames, I had said that the Dow daily was in a buy mode. The weekly had gone from a sell mode to remaining in a sell mode, but above 24. Oh, I should find it exactly. I said above a certain level, I think it was 24,800s, it becomes neutral, and it goes with that daily that's in a buy mode. Why? Because I have to wait for the MACD to cross positive in the weekly chart. That means I have to wait until Friday. So I don't want to guess. All I can say is that at this particular moment, it's still in the sell mode, but it is improving, and the monthly remains in a buy mode. So that's how we are. Okay, now let's get to nitty-gritties. The Dow extended its high. It's in leg C in a buy mode at 24,952. I do believe we'll have some kind of a pullback within the next 2 days. And then I'm anticipating this week we do get to a leg D, at which time I have to reassess everything. As you know, Chapman Wave peak Ds, you always reassess. Support right now is at 24,870 to 24,820. That's on a very short-term basis. The 24,990s should be quite strong resistance. We'll see. I'll be right back. Basil Chapman, Tiger. This is our Dow's up 125. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone, we're back, and we'll go on with this analysis. At the beginning of the week, we need to know exactly what we're looking for. If the Dow starts to trade for 2 out of 3 sessions with a close above 25,000, remember, it's a close above 25,000, that's going to be really positive in raising the base of support, even though I'm anticipating that after this big move, we're going to have some kind of a consolidation in time. I'm not sure yet about price, okay? Now, the other thing is this, that as mentioned in the den, one of our denners heard an interview that I did over the weekend. Well, it was last week, and was played on Saturday, 11 o'clock. I think it was 11 o'clock Eastern time. It was on Financial Sense News Hour, interviewed by Jim Poblava, a really nice interviewer. So it was a pleasure doing that. Most importantly, it was a different format, because here I do the charts live. I love doing the charts live, where you can just look and I can point, and if there's a question that comes up while I'm talking, I can just go back and show exactly why I'm talking about this particular time frame or whatever it is. So this was where I decided I would kind of prepare and send charts over, and of course anything could happen between the time I sent it and the closing price on Friday at 4 o'clock. But anyway, it seemed to have worked out well. But you do have to kind of scroll and go through the charts, which is just a little different. They're all there, and it's all very clear, and I really enjoyed it. So that was Financial Sense News Hour on Saturday with Jim Poblava. So what I'm looking at here is that within the context of the weekly chart, this pattern we've seen, remember we saw it in gold. Let me just show you the chart for gold. And of course, charts don't necessarily have to always repeat the pattern, but they do repeat often enough. Remember, the monthly chart made that arch formation after the September 2011 high in the 185 area of the GLD. And then what happened is it came down to 148, held that support, and ran up again to 174.07. Looked like it was going to break out, but I'd already drawn in. You remember I said arch formation, watch out, because that can go to a lowercase m. And if at any point it breaks down decisively, you've got to be real careful. Well, this is that candle. Remember the Chapman Wave Roman candle that we were talking about in the GLD back in April of 2013? Once you take that out and close decisively below it, that's tough stuff. You've got to be real careful. So in the case of the Dow, what we've had is the the Chapman wave right here. Roman candle in the monthly was the very next candle after the all-time high, 26,616. The very big issue is that we did take out that low. That was right there at 23,344, about 16 points below the previous low of February. And now we've rallied back, and this is now 1, 2, 3, 4. This is 4 months since that high of January. So far, we've used time and not price. Okay, let's get to there's a lot of stuff to do right now. SPX.X, there we go, the S&P, up 788, not as strong as the Dow, but it is in a leg C, blue C, it means in a buy mode, it should go to a D. There again, I'm about to draw for you the second arch formation. I do not want to jump. Remember, I'm not the person that says Dow 50,000. I'm the person that says, tell me how you deal with 25,000, and then I'll talk to you about 26,616, the all-time high. Don't talk to me about the future in terms of leapfrogging. You cannot leapfrog in weekly and monthly charts. You have to go step by step by step. And until you can achieve the next step, just don't confuse yourself. And this says to me, arch formation, yep, we can go to 2750, 2760s even. And then it could be much more severe on the downside in terms of the news that comes out to be negative. But that says you've got fabulous support between 2600 and 2540. So that's the way I look at it. So at this particular point, a very good bias towards the upside remains at this stage for this week so far. If you go to the QQQs, this is very interesting. Look, the Qs have extended. I'm calling this a leg E. It could even be a restart, but I'm calling it an E. But the stochastic at 97% says, wait a minute, you don't often get E's at in 97% with the MACD still expanding. This is more likely a C or even a D. It just doesn't look like an E. We'll deal with that. Meantime, everything's good. You've gone above the doji candle of Friday. That's always great to see. Look what happened when you had that doji candle of the 8th. The very next day was bullish, green. That's always very good. It says that these are halfway markers to the upside. And now I'm looking at the MACD and stochastic at 97.78%. That's 2.22 off 100%, which it never reaches. This is about the highest you can get. When you're down at the bottom, like in 2009, 2008, those bottoms that were made on the daily charts held, and you got bounces. You kept coming back because you were so, the term is oversold. I just say so negative. So this is the exact opposite. So far, this is very nice action. Here, the weekly chart and the QQs is different. It's making a cup formation. The monthly chart is still very strong. Parameters to watch, 170.44. If there is, it's up 0.97 today. If the Q, it's filling the gap. If the Qs are able to close on a daily basis above 170.90, today's high is 170.82 so far. That says we filled the gap. On the daily basis, it's a very bullish thing that has been able to do that. On a weekly basis, you have to wait the whole week to see where you actually close. But as I say, the monthly chart is still very strong. Fabulous support in the 169.20 to 168.50 area. Aha. Congratulations. Bravo. Number one is the IWM. Made an all-time high today. Went to 160.69. What is that? That's 6 cents above the all-time high of January the 28th, I think it was. 29th? January the 24th. What? Nope. Keep going. January. There it is. January. Oh, no, that's October. Yep, that's right. So it's 160.63. So we have gone above that. The IWM at 160.69 this morning. That's a very bullish indication. But here's the thing, and this is something I discussed. In fact, I've discussed it with Jim on Saturday. Look at those three highs, 160.63. Let me get to the daily chart because it's just so fascinating to see. And what I was saying is, it's always interesting to me that fund managers remember numbers in a horizontal fashion. In other words, 160.63 was the high of the 24th of January in the IWM, the Russell iShare 2000 ETF. Pulls back very sharply, a 10% correction to 144.24. Rallies again from that February low, goes to 160.30, misses by 14 cents, making an all-time high on the 13th of March. And then it pulls back 8% to 147.18 on the 2nd of April. Hey, has a rally, fails in the 157, 158 area, pulls back again, and then boom, the last 10 or so trading days goes to the all-time high. And what does it do? It makes a high today, and now it's down 6 cents at 159.78. Markets have memories. They have horizontal memories. What they don't have is memories of 20, then say 30, then 40 of a trend line, because it's hard to do that. And yet trend lines still have beautiful patterns. I'll be back to talk about that as soon as we return. Dow's up 118, S&P $7.80. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. Question about a company here that is sent into the Dan question. MariMed, which is turnkey solutions to cannabis cultivators. It's actually a company here in Newton, Mass. Yeah, this is not for the faint of heart. I'm not sure that's the correct expression I should use here. Volume, there's no volume, 45,000, 62,000. You have to book an appointment to buy some stock. But, it's looking quite good. A, B, C, having an inside A, B. Yeah, and you know what? If it's just purely speculation, $1.29, It looks like it has tremendous support at $1 to maybe 95 cents. If you're prepared to kind of take that risk and just sit, this is in a trajectory that seems to be up. Monthly chart has got A, B, C, D already, but it's acting well. You know, let's just say if you take a pot shot of this, maybe it will work out. Treat it as an option. Don't get too carried away. If you're going to do anything, just put it in your portfolio as a kind of a not just a speculation stock, but a really speculative stock. That's all I can say. It's not for everyone that's listening. Okay, so now let's go to the IWM. We did look, IWM right now is down 12 cents, just taking a bit of a breather off this spectacular move and bumping into resistance. It's that weekly charts, they're making higher highs and higher lows. I mean, that's the definition of a bull phase. And so far, this is a bull phase in the weekly chart. But what's really important is that the monthly chart had an instant restart that cannot be excluded. And my eye says, based on the MACD and the stochastic, that if all of May is a positive month for the IWM, the Russell 2000, and it doesn't have to close there, but somehow or other it gets to, it's at 159.73. It just made a high of 160.69. If it was, I don't care what the reason is, and I don't care how brief it is, if it even just pops into the 160, 180, 160, 250 area, that's enough of a breakout in the weekly chart to suggest that the 157 to 155 area, 157 to 154 area, under all other conditions, should be really strong support at this particular point. And right now, I'm looking at it and I'm saying it looks more likely that when this particular phase, 93% in the stochastic, MACD very strong, when this particular phase is concluded, that we're going to have to watch the high that was made at 158.38, the high of the daily chart of the IWM on the 18th of April. Because if there are 3 closes below the low of that candle, which is at 157.16, you're going to have a bit more of a timeout. And that's just really the way I'm looking at these markets right now. A little bit overbought daily, but dailies are still very positive going into, say, Wednesday, Thursday, Friday. All right, enough for that. I want to go to the GC, which is the gold trading. It was down a little bit, yeah, down $1.25 at 13.19. You see this move here? You see the way the MACD made a big Lamont type track turnaround, speeding up the speedway, and it crosses positively. And yet the price, it was okay, going from the 1300 level to the mid 1320s, now at 1319. It needed to hold and it needed to be more. That kind of stochastic and MACD pressure to the upside should have produced a move in gold. This is a continuous contract to at least those previous highs, the ones right here, back on the 25th of April, somewhere around there, in the 1333, 1335 area. That's all I can say. I mean, it's holding okay. The weekly chart still has tremendous strength as support in the 1306 to 1302 level. I just don't see anything yet in gold. And if you look at silver, keep your eye on the charts. Left side daily, middle is the weekly. On the right is the monthly. Keep your eye. Here we go. Silver coming up. And you will see immediately that silver's had a much weaker monthly and weekly chart formation, and yet it's held much, much better in that it hasn't wanted to go close to the low of 1577 that was made back in December of 2015. So holding okay is one thing, but if you're leading, you want to lead the way up, and if you're leading on the way down, you want to lead on the way down. So silver's just saying, yep, I'm holding okay. Nothing much to see individual stocks. Like, remember, I spoke about this, had a question in the den about PAS, Pan American Silver, and I said, wow, that is a spectacular move. At this point, I will want to call it a leg B. I'm actually going to change that. I'm calling it now a G/C. I'll give an emphasis to the G. If trading at 1772, down 38 cents right now. If it goes into the gap, if it goes under $17 in the next 3 days, that's going to say, you have to wait another couple of weeks before it has another one of those big spikes to the upside. And if it goes into the 19s in May, that's really good action. So it's had a fabulous move. It's giving some of it back here. Hasn't broken the gap up from 3 days ago, which is around about 1705, I think. Let me just check. 1711. And it's trading at 1772. Okay, now I want to go to the dollar, DXY. So the dollar is down 18 cents at 92.36. It's had 3 red candles after the doji peak F high at 93.42. Remain long from 90.07, the equivalent based on the UUP. And at the same time, the weekly chart is really holding nicely. And I know that there's been a lot of talk from a lot of analysts about dollar's going to really take it on the chin and it's going to go much lower. And I'm saying I don't really see that now. I will see it if the dollar starts to trade under 90.70 in May. I'm going to have to say, you know what, it's used up time. It hasn't been able to break into the 93.50s. Not good at all. But at this particular point, it deserves a bit of a breather. It's had 3 days of rest, no problem there. MACD is still good, but turning down. Stochastic's a little weak now, under 80% at 78.57. Weekly chart still strong. Stochastic at 86%. I still like the dollar. We'll see what happens there. Make it real simple. Dollar needs to close. Yes, this left side, right side price time match. Dollar needs to close above. Oh boy, when this goes all the way back. Did I even type it in? Didn't even type it in. Has to close above 94.22. That's quite a way to go in this particular market. It's almost 2 points. It needs to close above that to really for me to turn around and say, you know what? Weekly chart is in a bull phase. Right now it's in a corrective phase. Done very well. Monthly chart is improved. It's above its trend line resistance. We'll see. Dollar question about the dollar 120-minute chart. Did I do anything here? Yep, it's in leg D, maybe trough D at this particular point. We'll see what happens. The technicals are starting to improve in the 120-minute chart, but the price is not really showing it as nicely as it should. So thank you for that. I want to look at the EUR USD. Well, we're using 2 segments here. Oh, well, we need to start the week off properly. The euro is actually quite nice, 3 good candles, whereas the dollar's at 3 weakish candles. But until the MACD crosses positive and the stochastic at 18% in the daily really gets to the 25% or so, I'm just treating this as a bounce. And if you look at the USD JPY, that's the yen. We just looked at the euro-dollar currency pair. Now we're going to the dollar-yen currency pair. Look at this nice sideways action. I drew this in over a week ago. Said chance that we get some sideways action in the, whoops, there it is, in the yen. And this is about what we're getting. Just now, sideways can use up enough energy to say, you know what, I need more downside to really build energy. Or if it just suddenly breaks from 109.51 right now to the 110.15 area, that'll be good. I'll be right back. Basil Chapman, Dow's up 120. Be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Just before we go on, I know I'm going to forget it because it was one of the very early emails I got, and I'm busy scrolling down, so I'll forget to look back. So let's see, I think it was Chris wants to know, hi Basil, do you still see a leg D to come with GWPH? I'm long from the 143-ish level. Thank you, Chris. So Chris, I'm looking at this and I'm wondering why for 4 days, it's just gone sideways after the peak. See, this is GW Pharmaceuticals, PLC. Medical marijuana, leg D in the monthly. I've called this a leg B in the weekly. I don't see any reason why I should give it an alternate count right now. Stochastics at 87%, and the MACD is good in the weekly, and that's the same thing here in the dailies. The technicals are very nice. I do believe it should go to a D, but it does chop around. It has these stair-step moves, and if you're not in it before it takes off, it's very hard to get in afterwards because it always pulls back some, making higher highs and higher lows, but in a rectangle breakout kind of pattern. And it does have a gap that hasn't been filled yet. I think, yes, I believe it should make a D. What I'm going to say to you is, going in at 143 and it's at 145.25. This is one of for my subscribers. This is what I had the other day. We did get stopped out we got in, I think, at 145.46, and we got stopped out for a 4-point loss, only because I just didn't want it to be closing at the low of the day and then see another 4-point pullback. So that's how it is. I think we've got a caller. Do we have a caller? No, we don't have a caller. Yes, we do have a caller. No, we don't. Caller, if you're there, just say hi. I just don't see you.
Oh, yeah. Hi.
Hi. Who's that?
Hi. How you doing? Carlos from Miami.
Ah, Carlos, how are you?
Good. I haven't called in a long time. I'm asking about AMD. What do you think of it? I'm in the low 11s right now.
So AMD's 12.32 right now, up 38 cents. You know, I looked at this so often. I discussed this quite some time ago in terms of huge moves that go on for decades, and that's what AMD does. And my big question to myself was the peak E in advanced micro devices back in July of 2017 at 15.65 one of those big consolidations? I'm going to show this chart right now. This monthly chart, I'm going to squeeze it so you can see something really fascinating. Look at this. I had this notated. So this went to peak A, B, C, D. The last huge move was back in 2002. That was from October. It was at $3.10, and it's rallies all the way to 42.70 in March of 2006. The last since then, it's had peak Ds, but they'd be much smaller, big percentage moves, but smaller price. 162 back in November of 2008 to the high of April of 2010 at 1024. These are big percentage moves. So what it did was it went to, this time it went to the peak E, and it went from the low that was made round about September of 2015 at $1.65, and it screams up to 1565. Then it pulls back, but this time it had a sideways move pulling back. Now it's done these sideways moves before. I've seen them before, and this is a stock that goes from the single digits. Look at this. I'm going back to 1996. It goes from $5.13 and goes to peak A, and then A, B. It goes all the way to $48.50 in June of 2000. So my big question was, if I gave this to my subscribers as a buy, would this be one of those moves that's going to scream to the upside, or is this one of those bouncy moves that makes lower lows and lower highs over a period of time before it suddenly has a big fall? So it's at 1232. This is the monthly. And the only reason why I wanted to take a moment, Carlos, is that there's a chance that this is a recycle. I'm going to call it a recycle. So it's an A, B, C. I'm going to call this new leg D to the upside. The MACD is very strong. Stochastics at 96%. I like it. The only problem is that your entry price, it can pull back at 50 cents, 80 cents, or even $1 quite easily from here. So now let me just do this. So your plan was this one of those things that you bought as a trade, or you were hoping that you got in one of those?
As a trade. See if you can make to close to that 14 level.
Okay, good. That's what I want to know. Now, because of the history that it's had most recently of making lower highs and lower lows in the weekly chart, and then a very sharp move that goes to a leg B and even a leg C, it's had two C's that have failed in the weekly chart. Let's say that it's able to hold. Okay, I'm going to do this. If you've got a moment, I just want to show you something very interesting. The SMHs have just broken out, and I'm calling this a leg B. And that's saying to me that there's a chance it could go a little higher. My estimation is that the semiconductors, as a group, have had a spectacular run over the last 2 years, and this is part of a big consolidation. And this consolidation says that this particular move that it's in right now could go a little bit more. The entire week it could go higher. And then I'm suspecting that I'm going to have to be very careful. We are long the semiconductors. In my opening call for my subscribers, we actually long the three times long, and it's up about 16% or so. So I've got to really be careful at this particular point. So here we are. I wanted to just look at the SMHs to give you a sense of the strength there. And your advanced micro devices is even stronger in just percentage terms because it's a lower priced stock. So $12.31. I just want to look at the 120-minute chart. Here we go. Yeah, I'm liking what I see. A, B, C, D, E, possibly F for an instant restart. Okay, so this is what I'm going to look at. If you are looking for a percentage gain, you've just made yourself between 9 and 10%, correct?
That's correct.
Okay. So I don't know how much you have. If you have enough, I'm going to suggest that one part of your position, a smallish part of your position, say a third of your position, should have a stop, at least for today, underneath the low that was made today of 12.11. So that says to me, if you've got yourself a stop on some part of that position, if Advanced Micro Devices holds over the next 2 days or 3 days and doesn't take out $11.95 by Tuesday or Wednesday and is holding firmly, and the SMHs are still holding quite well, then there's a chance that your position might not be stopped out and it can go even higher. If that third position is taken out, I would put in a rebuy of the third position at about $11.86 and give it an $11.69 stop. And the reason why I'm saying that is that the strength of what I'm looking at right now suggests that even if there's a little bit of a consolidation, Advanced Micro Devices should go higher. At this point, all I can do is to use a trend line in the weekly chart and say that my target for advanced micro devices would be, you had said 14, but I'm going to say I would want to see how it can break above $12.70. Let's call it $12.80. If it can go above $12.80 by tomorrow afternoon, that's really good action. So I hope that helps you.
All right, thank you.
Thank you. Give me a call. Let me know how it goes. Thanks for calling.
Okay.
Carlos up 105.
Right.
We'll be right back. Bye, Carlos.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve coming up, and you've got Dave, you've got Tom ready. Great lineup. So a question about Boeing. Boeing has made a new, I'm going to call this a leg B for now. I still don't think it's going. I think maybe it can go to a C and a D towards the 352 area. It's a 345. I just don't see it making an all-time. Maybe I'm wrong because this has been a monster, but I don't think it's going to go above 371.60, the all-time high of February the 28th, for a while. I think it's going to consolidate for a lot longer in time. That's the way I'm looking at it. And the question I had over the weekend, of course, when I sent out all my different charts, I mean, there were just so many things that I wanted to go through. And what was very interesting to me is that as I'm looking at the different sectors, I said to myself, all right, let's go back to the, and what I did for my subscribers to my opening call, the section that I send out. I used to send this every day. I don't have time to do this, and it's just repeating stuff that I say in any case. So I didn't didn't do anything with this, but during the week. But on Saturday or Sunday, I send this out. This is my overview and market today, and I discussed things. And what I said was a couple of things. You've got the 5 quadrants. I love calling them the 5 quadrants. There's the 120-minute Dow, the VIX index, 120-minute chart, the short-term trading index, Richard Arms index. I call it the chin gauge for my work. This is the daily Dow and the daily S&P. And basically what I said was that the IYT, the iShares Transportation Index, was doing okay. It was still towards the lower end, but I love the way that Federal Express was trying to break out. That was important. I love the way the VIX index is getting close to some kind of a pop-up. It looked to me like it was still it went under the teens, went to the 12s, and that's a hint to say that there's still buying pressure, even though there could be a pop-up any day. And at the same time, the stock that we follow, sometimes we have it as a trade, sometimes we don't, is CTS. Actually, you could have just bought this like Joseph A. Banks. You remember that was the stock that just kept going up and up. It was one of the best stocks I could follow in the market for years. Oh, is that the end of the show? No way. All right, so CTS is acting very well, and that's a good sign. I think that's a very good sign. Hey, stay tuned for Steve. I can't believe we just zipped right through. The Dow is up 90. I think we're giving back a little bit. We'll have a consolidation into tomorrow, maybe early Wednesday. Have a great day. Stay tuned. Check out my opening call. We've got some beautiful trades, and hopefully that can keep up. See you tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.